Welcome to another CEO Wisdom podcast. We have Tim Tremaine with us today. He is CEO at Northlake Financial. He's in Toronto, Ontario, Canada. And we're going to talk about his background, which is quite interesting. Worked at multiple companies, multiple board of directors. Finances is going to be the main topic today. M&A is another fun one that we're going to get over to. Management, AI, the future, everything in between. This podcast is brought to you by podbuyer.com. That is my podcasting as a service agency. We help you start, scale, be invited to podcasts or find sponsors. Anything you can do to monetize your pod and scale it. So podbuyer.com for that. Tim, welcome to the pod. Can you tell me a bit more about yourself and about Northlake Financial?
No, thanks, Charles. As you said, Tim Tremaine, I'm CEO of Northlake Financial. Northlake is a consumer lender in the Canadian market. We're majority owned by the largest private lender in the US. And the whole business model is to replicate what they're doing in the US market and the Canadian market. There's a lot, we're years behind in terms of technology and some of the platforms that they use on a day-to-day basis down there. Other than that, I'm married, 3 kids, an 18, 17, and a 4-year-old, and pretty busy guy. But yeah, the kids keep me busy. The startup definitely keeps me busy. So that's something I had, forgot how much work goes into startups. So the Northlake is 2 years new. So.
Yeah, lots of work. On your side, what led you to the position that you occupy today? Last time you and I we were talking about the cricket, skating, curling club. We were talking about your various positions at various financial firms. You also were in a marketing group at some point. So give me the highlights of your career so far.
It's a pretty winding path. It's not a direct route to anything. There was no grand plan. There was no, this is how I'm going to build my career. Graduated from my undergrad degree. About the only job I could get was sales in a brokerage. Very quickly realized that I could set up my own brokerage, my own distribution system more accurately, and did that successfully, sold it. Moved to Toronto, worked for a family office, worked for a national financial services firm, and then was offered a position as a president of a marketing services firm. And that was really the genesis of when my career went in a completely different direction. That company had multiple entities associated with it. They were all distressed. And I was taught very young, if you do something for 90 days, you own it. So I had been there for 90 days when I had figured out just how bad everything was. And I had a 2-year run working out a very complex distress scenario. And that gave me a pretty interesting tool set to bring to other companies. It was kind of a baptism by fire, I guess you could say. From there, I went to work for a small private equity firm, specialized in distressed assets. At that time in the market, there were lots of different companies, all kinds of different sectors. And I did that for a few years. That was really interesting. That really allowed me to broaden my horizons and work in sectors that were absolutely fascinating to me. So I got to learn a lot about quite a few different industries. From there, I actually acquired one of the little distressed companies that I had worked with over the time. It was supposed to be a hobby, but it got to a point where it was just too big for me to not turn my attention to it as well. My wife was not thrilled with my travel with 2 young kids at home at the time. So I wanted less time on the road and more time at home. I acquired that company, grew it, sold it successfully in 2020. Thought I'd take a year and retire and enjoy. And that's when the US group and I had a discussion about starting a Canadian subsidiary of the US group, and it's been fun. It's been exciting. It's more of a technology play this time around. It's a fintech. It's we're building in a very turbulent time, so that makes for a lot of excitement as well. So that's the quick on the professional side. You mentioned the cricket club. Cricket club is one of the largest private member sports clubs in the country. One of the oldest as well. I think it's produced more Olympians than any club in Canada. That was quite an education too. I know, most things I get involved in, I tend to learn something from them, but that was, I think, roughly 5,000 members, ranging in age from 6 months to 106. And, all with team sports or activities in the club. And that was very interesting, having so many constituents and having to find ways to keep them all happy with such a wide variety of interests as well. And then, of course, private membership implies that, a different service standard as well. I think we have 4 or 5 restaurants in the place. So that was one. I've served on a number of boards. The CNIB was one that I really enjoyed. I chaired their camp up on Lake Joe in Muskoka. And from there, we built a national triathlon team of athletes. So that led to some pretty fun experiences, learning how to train blind athletes to race in the sport of triathlon. So, but yeah, there's a few others as well. So.
And to manage a dog at the same time is it? Yeah, interesting. Let me know, Tim, for this year, what are the challenges that your business is facing? What is your priority this year? What is your top 3 goals, and what are your top challenges that you'll resolve?
Well, the biggest challenge is definitely the economy. We're a consumer lender, right? So, we've got rising interest rates, increase in delinquency and defaults like any other lender in the marketplace, although we seem to be outperforming, which is good. One of the benefits of being 2 years young is we don't bring a lot of baggage with us. So we've been able to navigate the market quite well, and we have a phenomenal partner in our US parents. So we get a lot of data, and we use a lot of, artificial intelligence to help us make, decisions that protect the portfolio and protect the company. So the biggest challenge will be the economy this year. Second biggest challenge is controlling growth. It's in a fast-paced company that's in an aggressive growth stage. You can hide a lot of problems in exponential growth. So we're really trying to keep on top of, our operations. We focus on operational improvement is kind of the theme through the entire organization. We keep our OPEX really low, probably the lowest in the country. And that's intentional. We automate anything we can. So that's an ongoing battle because, again, we're 2 years young and trying to build that. I guess the last one is just, keeping the foot down too and taking advantage. I think in turbulent markets like this, there's as much opportunity as in the market if you're positioned well and you're building your company properly and being, hands-on in its management. So.
When it comes to hiring people inside your org, what tips do you have to pick out superstars and weed out B and C players?
We use a number of tools. First of all, we don't have a director of, an HR director. We have a director of people and culture. When we started the company, it was during COVID, so we started remote and we got over 70 employees remote across the country. So we had to create a different kind of environment in order to have any kind of affinity to the company and to make sure that people felt as though they were part of something, bigger than just sitting at a desk in their house all day. We do actually have a physical office now. We have about half the staff in that office. Um, and our more administrative, we're now bringing back into the office. So we have the synergies and the real-time learning associated with being really close to your peers. So, and it's a completely open concept office. So it's cubicles, stand-up desks. I'm at a stand-up desk now, although this is in my house. People move freely through the office. We have a lot of workstations that are available for those to come in and work, part-time. We have a lot of flex hours. But in identifying talent, what we've done is we use a lot of tools. Talent click. We use a lot of personality assessment up front. We have profiles, and we use that. We hire everything. We hire sales. We hire data analysts that are extremely sophisticated. And most of those are remote because they're that hard to find. So I think we interviewed probably 80 people. We used Test Gorilla to test their proficiency in the platforms that we work in primarily. We not only have our typical data, which is a big data bank, but we also have the build and applications of all of the systems we're replicating for the Canadian market. So I think we interviewed 75 or 80 people to get 3. So it is a very difficult process. We're about an hour north of Toronto, actually, and we have a great talent pool up here. We have a lot of really good employees that just don't want to do the drive into the city anymore. Toronto's a great city, but moving through that city is near impossible anymore. The congestion, the traffic is so bad, and even the public transit subways are jam-packed all day long now. So we're up a little further north where you get a little more better quality of life, and in terms of access to green space and skiing and water and things like that. So we when we're dealing with employees that there is a bit of a lifestyle associated with it. So
Got it. And you basically target dealerships with mostly financing solutions. So you screen the end customer that wants to buy a vehicle, and then you decide if you lend the money or not. Is that
yeah,
pretty similar?
that's our primary product, and that's the product we have launched in the Canadian market right now. We're in automotive finance, so we're a full spectrum lender, meaning we're lending right from prime into subprime product. So the interest rate range is huge. We're the only lender, including the big banks and insurance companies in Canada, that auto decisions 100% of the applications we receive. So we're using 30 years experience and a back-end intelligence through our US partner that allows us to render auto decisions. And then what we've done is typically even after the approval's granted, there's a manual process between the lender and the dealer. And this could be dealer, this could be point of sale, this could be a medical. It doesn't need to be vehicle, but this is the vertical we're focused on right now. We've automated that entire process. So on average, there would be 17 communications between dealer and a credit team. We no longer have a debt credit team. The dealers go in and they design their own loan for the consumer. So yeah, that's our primary vertical.
Have you seen the growth go up since COVID? Because in COVID, the demand for vehicles was zero, right? Like people were just not producing. And then post-COVID, I believe it exploded. So what effect did that have on the business?
Well, in COVID, I mean, auto industry suffered from supply issues like every other industry. New car supply was at its lowest, and the market, that had ripple effects through the market. So used cars, there weren't as many cars coming off leases or out of fleets, so that reduced used car inventory. Some people just decided that they weren't going to drive anymore because they didn't need to commute to work during COVID. So they just kept their car. It inflated prices, though, in both used and new vehicles. And it created all kinds of issues in Canada as well. We have this phenomenon where, when the exchange rate with the US gets to a certain point, the vehicles that come in on trade actually get shipped to the US because there was even less inventory down there, and dealers could make more money selling them into the US market than they could to Canadians. So there's all kinds of things. We are seeing prices drop in both new and used vehicles and light vehicle and truck sectors or segments. So that's promising for the most part. We are seeing higher demand from consumers as well. Now, given where interest rates have gone, that's cooled it off a little bit, but there's always a certain percentage of the population that has to replace a vehicle either due to repair or age, or in my case, teenagers that become of driving age, and now all of a sudden, I have multiple vehicles sitting in my driveway. So the market's there. There aren't as many lenders in the Canadian market. In the current economy, many lenders have tightened dramatically and will only lend to safer segments in the market. So there's always a market there and available, and so yeah, COVID did definitely have an effect on the market. Markets go up and down all the time, so we just adjust the strategy. I don't know if I'd call one good or bad. So.
And how do you get these new clients? I believe it's a partnership with the dealers. So you target dealers, you call them to generate new sales that way. How do you get the new clients in?
So there are a couple application aggregators in the Canadian market. So we get tens of thousands of consumer applications submitted by dealers every month. They come in through the aggregator. They can select how many lenders they want to send it to. Now, in Canadian market, we have a lot fewer lenders than they would in the US. So there's, those of us that there's the big banks, there's a couple of insurance companies, and then there are, private or second tier lenders. Then we fall into that category, even though some of our rates at some time are better than the banks. But that's where we get our applications, and then we work with dealers. Now, for us, because we have a technology suite that is very different than anything else in the marketplace, we actively go out and, attend conferences like the one I'll be at as soon as we're done here, to meet with dealers, show them the technology, and show them how we can help them make more money and move more vehicles.
So what will be the top 3 goals for 2024?
2024, the top goal is to continue to roll out the suite of product that we're building into that Canadian market, to continue to add dealerships and distribution. We're also adding other services. As we build out that technology, we can take on the service, other portfolios that other than the ones we've originated. So we've taken over administration of 2 portfolios just in the last 30 days, distressed portfolios from companies that either had such poor performance they lost their sources of funding, or those that just can't produce a big enough spread to cover their operating costs, so they outsource that to us. So that's a big push for us. We think there's significant opportunity in the market to take over either companies or portfolios in the next 12 months.
On your deathbed, what will you have want to accomplish as a businessman and a father?
That's a good one. It's funny because I think I've, developed a career, and I'll do that one first, where I have a great reputation for just being an honest guy who can move from, company floor into the C-suite and sit with the lawyers and accountants and transition between the two quite well. And that is, I'd like to continue to do that. I tried to take a year off, didn't work. I wasn't going to let this opportunity pass. But I've also had a number of people I've worked with in the past, either as a consultant or in my capacity as a president of an organization that have come back and asked me to be involved in other projects. And that's a lot of the board work that you see, but it extends beyond that. So I have some other interests that are pretty fascinating to me and allow me to kind of be a pioneer in some new industry and some new ways of approaching old problems. As in terms of a father, I have three wonderful kids. My wife and I have been together 25 years as of this week, actually. Yeah, it'll be 25 years, this weekend. So I think I'd like to be remembered as a devoted father and husband to start. Someone who never backed away from a challenge, which I've tried to instill in my kids. My kids are great kids. They're I'll say overachievers academically. They're just good people, and so that's kind of my legacy, is that I'm leaving good people to this earth to continue on and do some pretty special things. And our youngest is he's been with us since he was 5 months old, and so it was the beginning of COVID, and it was a big challenge for my wife and I at our age to agree to bring a new person into our family, which wasn't the original plan. But 3.5 years later, I have a 4-year-old, and he is our son, and he is a wonderful little boy. And I think what he's done for our family is kind of immeasurable, because I had two teenagers who had to learn very quickly in the middle of, the worst pandemic of our lives, how to care for, a young guy who needed a lot of special care at the time. And I think it made them better human beings. And that my wife and I making that decision, I think was something that, we'll never forget. So, yeah. And then, we've never backed away from any kind of challenge, any kind of opportunity, any kind of risk. We have somehow managed to travel the world and do a lot of really great things and meet a lot of wonderful people. So that's kind of the legacy. I'm hoping my kids pick that up and get to live very full and rich lives. So I don't know if that's the answer you're looking for, but that's where, my kids are my legacy, really.
Right. Yeah, I can't really look for an answer in that one, because we all want to leave a different legacy, and it's a very good one, to say the least. Very inspiring how you not balance, but you excel in both personal and business, it seems. So thank you for the wisdom today, Tim. Where can people find out more about you?
LinkedIn's the best place to go. LinkedIn has got, my history. There is contact. I do get a lot of contact through LinkedIn now. So I'm always happy to respond to a message. If it's a message about, me or my business, I'm happy to. I don't, I get a lot of solicitations through there, and I just too many to actually respond, even to say no, thank you. So I do look for those personal messages, and I do try and help out wherever I can. So that's probably the best spot.
Thank you so much. I was Tim Tremaine and Charles Cormier for another CEO Wisdom Podcast.com.